Prakriti Sofat is a regional economist at Barclays Capital. She joins us now from Singapore. Prakriti, thanks a lot for joining us again. Let's first up talk to me about what you're expecting out of today's meeting.
Well, today we expect Bank Indonesia actually to stand pat at 6.5%, but I think there may be a possibility that we see some adjustment in the reserve requirements.
Well, what would that do?
Well, I think in the last policy meeting in July, they clearly indicated that inflation is rising in the country, and they're going to keep a tab on liquidity. And I think an adjustment in the reserve requirement would be in the right direction. However, I think it's fair to say that if the reserve requirement adjustment was linked to loan deposit ratios with the objective of actually boosting credit growth in the country, it's not going to give the right signal to the market in terms of tightening.
Do they move later this year? I mean, some are talking about 7% by December, or shall I say by January 2011.
Well, actually, we share the view as well. We're looking for Bank Indonesia to hike rates by 50 basis points before year end. I mean, clearly, when you look at inflation, headline inflation has jumped higher. But I think the key point to highlight is that core inflationary pressures are being pushed up given the strong domestic momentum in the economy. At the same time, inflation expectations are currently running at a 20-month high. And historically, they've served as a very good indicator of where inflation actually goes down the track.
Yeah, I mean, I was talking to the Indonesian trade minister just a short while ago, and she was suggesting to me that inflation had stabilized and saying that Bank of Indonesia was getting this balance right. But others who are more critical say that they are really at the moment ignoring inflation and concentrating on growth. What do you make of it all?
Well, I think, of course, there is some sort of a growth bias because clearly Bank Indonesia has been encouraging banks to lend more. And I think when you see the pipeline of projects, it is picking up because businesses are becoming more comfortable with the growth outlook. But I think it's fair to highlight that inflation is rising, and it's important to anchor inflation expectations in the economy. And I think that we do need to see some normalization coming through before the year end.
Yeah, bond market. Let's have a look at that. One of the best bond markets performance-wise in Asia. Is that sustainable?
Well, the bond market obviously has been doing very well. Now with inflation picking up in the near term, it's possible that the front end would feel some pressure. But I think on the long end side, the 15 to 20-year bucket, clearly we continue to see strong real money inflows. And this is, the demand for yield in the global macro backdrop continues. We also think that the structural macro story of Indonesia remains very positive. We are looking for the country to get upgraded to investment grade in the next 9 to 15 months. So that sort of positive dynamic continues to filter through at the long end of the market.
What about them actually getting a bump up and making it investment grade by, let's say, this time next year or even in the new year? Do you think it's possible?
Oh, yes. We've actually been very positive on the Indonesian credit. I mean, to be honest, if you look at this, the balance sheet of the country, it's completely changed over the last decade. Public debt figures, external debt, foreign exchange reserves, everything is moving in the right direction. And clearly, macro stability in the nation has also risen. So I think that, yes, we do believe that we're going to see Indonesia hit investment grade in the coming 9 to 15 months from 2 out of the 3 major rating agencies.
Prakriti, thanks a lot for that. Prakriti Sofat joining us from Singapore, where she works at Barclays Capital.